Okay, fam, Tom Lee has dropped some very important information on small caps that you definitely want to sit tight and listen to. And it specifically in this video is going to be about SOFI. Let's take a listen to Tom Lee. Don't worry about subscribing, smashing the like button, or looking for the Discord and coaching link. We'll talk about that in just a few minutes. Let's take a listen to what Tom Lee has to say about small caps. I also lead by example for my students. You guys can see on the screen, my account is up almost 17% in 3 months, which is over $30,000. And in the last month, I am up over $16,000, almost 8%. And this is in my small challenge account. I lead by example to show you how you can consistently make passive income while trading in the market safely. Keywords, safe and consistent. Let's take a listen to what Tom Lee has to say about small cap stocks just like SOFI.
Let's get to the markets here. Bring in Tom Lee here at Post 9, of course, Fundstrat Global Advisors, co-founder, managing partner, head of research, S&P target for year-end 6,300. Great to see you, Tom.
Great to see you. You don't necessarily need commodity prices to help cyclicals.
Yeah, energy, but even materials to some degree. Some are.
Yes, that's right. Yes. So for those, I would say yes. I'd say the outlook for energy stocks isn't great, as good as people might expect under a Trump presidency, just because expanded drilling is lower oil prices. But for cyclicals like industrials and financials, this is, for all the things you guys were discussing, a great environment, including M&A and cost of money falling and animal spirits and deregulation.
Do you think there is real reflation risk in the next, say, 6 months?
That is something that we can see how markets are repricing, and there's a measure called 1 year inflation 1 year forward. So what does markets think 1 year inflation is a year from now? That has been creeping up. It's actually now at 3.6. It's been a trigger point in the past where the market starts to worry. So whether it's the deportation that's causing that, or fiscal spending, I'm not sure. But, it is, markets are starting to think about it.
Or more of just better growth outlook could help inflation expectations rise. I guess where Trump Trade 1.0 ran into trouble was around trade policy. And once we see what he delivers there in terms of tariffs, something he's been very, very consistent on, do you think the market is looking past that, or everything else, the deregulation, the lower corporate taxes, is going to offset any weakness on trade?
I think that if someone was trying to paint a negative picture, that's the tariffs and the trade is what's on people's minds. But of course, that's the one where we don't know what the ultimate sort of policies will be. I'm sure markets will actually provide a lot of real-time feedback, and I think that's going to help shape what the policy is. So I think in general, we should expect a pro-business environment, one that's probably equity-friendly as well.
Where are we on fundamentals and just, in terms of this recent rally, in terms of multiples and your expectations on earnings as we head into next year?
Earnings season, I think actually, as we're wrapping up, is still been very solid. As you know, the drag on earnings has been energy and some of the commodity groups as well as healthcare. But, groups like industrials and tech are still producing good numbers. I think next year the outlook should be good because cost of money is coming down and we're seeing housing activity pick up. And if there's mergers, this is actually much better for small caps, and small cap earnings growth has been around 40%. So I think it still sort of guides us to the same trades, which is we want to be more cyclical over the next 6 months, and then also look at things like small caps and Bitcoin.
Small caps, why mergers? Just give me a little bit more on why small caps are going to be a bigger beneficiary.
Well, part of it is the backdrop. Small caps have underperformed for the last 5 years by really the largest margin in 25 years. They're now trading at 10 times median PE relative, and for the S&P that's almost 18 times, so a 7 PE discount. Small cap earnings growth is faster, and not only that, but roughly 44% of it is what I'd call very cyclical, and that's things like regional banks and industrials. That's a bigger weight than in the S&P. And then finally, there's a lot of cash on the sidelines, and I think if people are looking for breadth expansion, that's small caps.
Well, they also don't have the trade exposure. They get the benefit from lower taxes and regulation.
Yeah, that's a good point.
Without the tariffs also, so it feels like they're in the sweet spot.
That's right, and the margin of outperformance could be sizable. They've underperformed by almost 100 percentage points, so I think you could recover that over the next few years.
We were mentioning Elon Musk a moment ago, and over the weekend, he endorsed this notion from Senator Lee about end the Fed, essentially. Journal over the weekend with the piece about Powell preparing or being ready to defend a removal if, in fact, he's asked to leave. Do you think the bond market would revolt at any kind of attempts to influence the Fed or re-executivize the Fed?
Yeah, I mean, absolutely. I mean, the Fed is the most powerful entity in the world, and part of it is its independence, and it's something that even the bond market is scared of. I think changing the structure of the central bank would be not good for capital markets.
So you heard what Tom Lee said. Small caps are underperforming to their lowest in 25 years. The median average PE of these small caps currently is 10x. The SPY is 18x, and small caps grow a lot faster and have more upside most of the time than the SPY. So they usually trade in premium to the SPY, 20x, 25x. So based on what Tom Lee said and how this works and how the market typically behaves, small caps are underperforming by about half or a third of where they normally would be, meaning that right now SOFI should be growing a lot faster. SOFI really has an upside potential of about 50 to 100% in the next year or two. The stock price of SOFI, based off of small cap, future guidance, and median traded PE ratio, SOFI should be around $30 to $40 right now, and it's 14, which is good because it was at $6 previously. But based off of the direction of the country right now, the student loan forgiveness, the financial sector, as well as lots of money in the money market accounts and the SPACs funds for the U.S. government, as well as FDIC insured cash sweep program. There's a lot of money out there. It's starting to come into the stock market. There's a lot of money that was on the sidelines. Interest rates are being cut. Taxes are going to be getting cut this year. We have another 25 to 50 basis points on the interest rates that are getting cut in 2025. Inflation's coming down. The PMI services is expanding like crazy, and PMI manufacturing has stabilized, and it's going to start expanding. I anticipate this. So does Tom Lee going forward with Donald Trump. And of course, drill, baby, drill, which is more oil. Of course, that drops oil prices. Transportation costs go down. Overall expenditures go down. The cost of fuel goes down. Trucks and their expenditures go down with transportation costs, like I said, which means eggs, milk, all kinds of stuff. Building supplies go down, so houses are cheaper to renovate or build. Everything just gets cheaper. It takes time, but this happens. Small caps could return to their median PE forward-looking ratio and performance, which is around 20x, 25x. Right now we're at 10, which means in the next year or two, if all is well and all works out, which it's looking like it will, SOFI could be 25-ish, maybe 30 by summer or end of year 2025. Palantir is going crazy. Palantir could end up at $80 to $100 by summer at this rate. They're also in the S&P 500. Before we go any further, if this confuses you, median PE ratio, underperformance of small caps, how they work in conjunction with the SPY and large cap stocks, if all of this and the market talk is confusing you, but you are really trying to retire early or just make more consistent profitable income to live a better life, I would love to help you guys out. Like I said in the past, I was broke and bankrupt 5 years ago, grew up in a Catholic household, and I told myself once I achieved my financial freedom, I would build a system that worked for others. You can see on the screen all of my students' profits. I have students that have went from 30K to 70K in 4 months. Other students went from 8K to 27K in as little as 4 months, and other students that turned 300K into almost 500K in 3.5 months. If you guys would love to have that same financial freedom, I would love to help you guys out. I have Black Friday specials going on right now. If you guys want to sign up, investorcorey.com. Link is in the information box below. But don't take my word for it. You guys can listen to what my student Adam has to say.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. I've seen the growth, and it's almost like unbelievable. Like in a market that we're in now, I was still able to consistently grow because you're so, methodical and structured, and you care about each student. I'm here to say it how it is, right? I've made consistent growth. So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So let's take a look at SOFI. I'm going to show you guys some very important things on SOFI, okay? We have got ourselves a really good chance of having a slight pullback, not much, but it's time to get in. We have some confluence. As you guys can see here, I'm going to put this to blue. This is going to be our support. I'm going to draw another support, which is very strong. One at 10.47. $11 is another strong support. And then we have a lot of support around 11.50 right there, between 11.50 and 12. So it's very, very strong. We also have a daily gap, and this is what I want to show you. Gaps, typically, they'll get filled, but in time, if they don't fill and the stock price moves away, it's just a matter of when that's going to happen. And sometimes it doesn't, though. Like, not every gap gets filled. Most of the time it will. This is a daily gap from 13 to 13.50. There's a 50-cent gap on the daily chart. So we go back to the 4-hour. We'll lock this in. There we go, locked in. So a pullback to 13.61 is likely. And typically what happens, the psychology of how things work in the stock market, a lot of people will put their stop losses in predictable places. So you'll have a lot of people that will look at this and will put a stop loss at 13.53, which will cause more selling. More stop losses will be at the bottom of the gap, which will cause it to fall. And then you'll have more stop losses here, which will cause it to fall. And then all the people down here that sold anywhere in here, when the stock went all the way up, they're like, oh my God, I missed the move. And you've done it. You know you have. Oh my God, if this stock ever goes back down to this area where I sold because I missed the move, I will get back in. Well, guess what? All of those people start buying it up right here. So long story short, what I'm going to do is I'm going to set a buy order right around 13.50, another one around 13.10, and another one right around maybe 12.30 to 12.50. And if this doesn't happen and the stock starts to go up, I'll buy here, wait for a little bit of a pullback, and add again. But this right here is how I would enter SOFI right now. If you don't want to wait, you can sell 13.50 puts going out 2 weeks. And if the stock dropped and you get assigned, go out 2 weeks and sell 13 and do the same thing with puts. So that's another option. Buy the shares with buy orders or do puts, which is exactly what I'm showing you how to do. This is how stop loss orders work. And that's how it's going to play out. I really believe it's either going to fall like this and eventually we'll be back at 12.20 and then we run. Okay. Look at this move. Lots of move, lots of support. Gaps up, then it comes back down. Maybe it breaks the gap, comes back down here, consolidates, and then runs. But there's a very good chance that doesn't happen. So I'll sell 13.50 puts, and if the stock keeps going up, I'll raise my put to 14 or 14.50. This way I can make money on SOFI. But if you're not trying to make money on SOFI with puts and you just want shares, then you should look to enter right at 14. See if it drops a few pennies, get in at 14. If it drops more, dollar cost average. But in the long run, with SOFI and small caps, and the fact that we look at their market cap at 15 billion and then we look at their revenue trailing 12 month at 3.63, we're looking at about a 4 price to sales. Anything under 10 is good. Anything under 5 is extremely good. And in the 3 and the 4 range is pretty stellar. So the price to sales is really good. The economy is getting better. Inflation's going down. This is the perfect time to invest in small caps. And you can see how steadily SOFI has increased in price. With this gap, though, got to time it just right. If you're getting in at 13.50 or 14 and it decides to drop, you got a dollar cost average. But my price target by January, depending on how this plays out with the gap, it could come back down going into January, and then as you get really close, maybe come. So depending on how things go, as we get to the end of this month, there could be a pullback consolidation, and it could kind of run in this number and then kind of come up like this. And I think we could see first week of December pushing 15. It is possible. I'm thinking this kind of a move, the stock maybe come up a little bit, consolidate, maybe it'll gap down, something like this, come back up, resist a little bit, then come back up, and then start moving in this direction. And by the time we get into mid-December over here, we very well could see the stock up right around 16.50. If the stock does not pull back through this gap and fill and just consolidates and goes up a little bit, we'll probably see something like this. I would say realistically, we could see anywhere between 15.50 and 18.50. Between 15 and 18 by end of year is possible, but to be a little more conservative, I would say it's pretty safe by January. We could hit 15 or 16, but I'm being very conservative. We are are very, very strong buying pressure right now. It's relentless buying pressure. So the stock could very well hit 16 or 17 or maybe even 18 by January. Now, realistically, going into summer next year, it wouldn't surprise me at all if SOFI was kind of up here next summer, like $18, $19. Realistically, 15 to 18, very doable by spring or summer. So it's not too late to get in. Just understand what I told you earlier about selling puts, selling these puts at different strike prices and dollar cost averaging if you're buying shares, and put your orders in to automatically fill. Set a buy order for $13.50 or $13.58. Set another buy order for $14, another one for $13, another one for $12.50. If you're sleeping or you're doing something, the stock drops, automatically fills, and it gives you a dollar cost average, and you get a position into SOFI. This is a small cap. It's underperforming, and just off of its base median PE typical ratio and it being underperforming, as all small caps are over the last 25 years, it would signify a 2x return if the market and the economy recovers, which is said to be happening right now, and it could be another year, maybe year and a half to get more recovery in the market and the economy and to get better. It could take up to 2 years, but that's a double return, 100% 2x return. And there's even more of a premium than 20x on small caps. It trades 25 to 30, which would be a 3x. So I anticipate by year's end of 2025, which is a little over a year from now, we could see SOFI pushing 30, 35. And by the end of 2026, we could see SOFI in the mid to high 40s. So 2 years could return 3x. It's very good. It could be more. I'm being modest though. But that's what I'm looking at for SOFI. But of course, they have to be profitable like they've been. They have to have a good business model like they do. They have to keep pushing the envelope and doing good business and generating more profits and more revenue. But they're only responsible for so much if the economy is bad. But ultimately, SOFI is a very good buy, even at 14, because it's worth every bit of 14. And I told you guys, SOFI would go from $12 to $14 by the end of the year, potentially. And that Palantir would go to 45 to 50, and it broke $60. And not only did SOFI go to $10 to $12 or 14, it broke that, and we had a high of almost 15, like 14.50 and change. So it's happening. All these stocks are happening. SoundHound's next. Wayfair's following that suit thereafter. There's a lot of stocks that I'm going to go over in an upcoming video to help you guys out. But SOFI, like Tom Lee said, small caps underperforming. This is a great stock and it's exploding. So you don't want to miss your opportunity to get in, although you've missed a pretty decent move already from $6.50 to $7 all the way up to 14. But if you time your entries right now, dollar cost average, and play the long game, 1 to 2 years or more, SOFI is still a very great investment. Don't forget, guys, you can sign up for my coaching, Discord, training course at any time. I would love to help you, fam. Black Friday specials for all new students right now, very limited time. Link is in the information box below, investwithcorey.com. I will see all of you guys on the next video. Take care of yourselves, and remember, let's grow our wealth together. Don't forget, guys, if you want to take control of your financial freedom, full training course, Discord, and one-on-one coaching with me, Black Friday specials we have right now for all new students. InvestWithCorey.com. Links in the information box below. Limited spots on these specials. I hope to see you guys soon. And remember, until the next video, let's grow our wealth together. Take care, fam.